This is the Asia Trade. I'm Avril Hong in Singapore.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. A cautious open ahead for Asia as Wall Street's rally shows signs of fatigue amid economic and geopolitical risks. The US yield curve steepening on Fed rate cut bets. The NATO summit gives President Trump a win on defence spending as he declares the latest Middle East conflict over and flags a meeting soon with Iran. Also ahead, we hear exclusively from CATL's Chief Manufacturing Officer about their push to prioritise overseas expansion. And we talk AI with the founder of one of China's little dragons, Minicore Tech.
Asia Tech will be in focus in the session as well, particularly after NVIDIA's fresh all-time highs. We'll be watching its suppliers. But aside from that, it's the sense that maybe stocks will struggle to rally hard given the tariff deadline that's coming up, the flat close on Wall Street. But of course, quite helpful are those continued bets about Fed rate cuts. Aside from that, we're also keeping watch on Asia currencies, including the Hong Kong dollar, which of course has been really popular to fund this carry trade in the past month or so. We've been seeing how the Hong Kong dollar touched the weak end of the trading band. The HKMA has intervened $1.2 billion worth to defend the currency peg. Heidi.
We do have some breaking news given all of the renewed focus on the Fed and the sort of supportive easing trajectory to come for the rest of the year. We're hearing reporting from the Journal that President Trump is considering naming the next Fed chair early in a bid to undermine Chair Powell. His exasperation, according to this reporting, over the take-it-slow approach at the Fed under Chair Powell to cutting interest rates is prompting him to consider accelerating that timeline when he will announce that pick to succeed Chair Powell. Of course, Powell's term runs for another 11 months. In this report, we're hearing that the president in recent weeks has toyed with the idea of picking and announcing a replacement by September or October, according to people familiar with the matter. One of them saying that the ire towards Powell could prompt an even earlier announcement sometime this summer. Some of the top contenders, just to remind everyone, the former Fed Governor Kevin Warsh, National Economic Council Director Kevin Hassett in the mix, according to people familiar with the matter. Treasury Secretary Scott Bessent is also being pitched to Trump by allies of both men as a potential candidate, according to some of these sources. Other contenders include David Malpass, formerly of the World Bank, of course, and Fed Governor Waller in the mix there as well. So that earlier than expected timeline potentially for a replacement to be announced for Chair Powell is what we're hearing. Well, President Trump says the US will hold a meeting with Iran next week as he continues to cast doubt on intelligence reports claiming the US bombing of key Iranian nuclear sites inflicted only limited damage.
They said it was actually, the report said it could have been they don't know. I mean, they did a report. I could have Pete talk to it because his department did the report. They really don't know. I think Israel's going to be telling us very soon because Bibi is going to have people involved in that whole situation. We hear it was obliteration. It was a virtual obliteration.
Let's bring in Bloomberg editor Michael Heath for the latest. So according to the president, the conflict is essentially over. There's still so much uncertainty as to what damage was done and where it leaves Iran.
Yeah, I mean, it is. I mean, again, just this uncertainty that we sort of always feel, in these situations, particularly with Trump. But just reflecting on what he said there, obviously he doesn't like to be proven wrong. We know that. But Israel has come out and said it thinks that there was significant damage. Iran's foreign ministry has said similar. The UN nuclear watchdog, the IAEA, has said that it thinks it was significantly damaged. So, it does look like there was a degree of success. It's really just a matter of how much actually was done there. And we do know that there had been, before the US went in, there had been talk that, if Israel sent in commandos, maybe they just need to try and prevent it being opened, the Fordo facility, and that would do quite a lot of damage as well. So we're really just having to wait until we get more news on it. As to the conflict itself, well, I mean, we're sort of in day two of this ceasefire, which does seem to be holding, and the US is sort of Trump mentioned that they might have talks with Iran or that they would have talks with Iran next week, and really sort of what that comes down to, and I guess it would also give us a better understanding of the nuclear program, is getting those IAEA inspectors back in to assess the damage, to look at where the enriched uranium that Iran has already, where that's located, and just the status of things. I mean, you really need people on the ground to understand this.
Mike? How would you rate the degree of success at NATO? I mean, we're getting Trump backing Article 5. We have these NATO leaders as well, and how they are, signaling the defense spending.
Yeah, on the NATO defence
Yeah,
thing.
exactly. How would you rate the success, I guess, of this trip? I mean, he's been feted like a king.
Well, yeah, I mean, look, it's totally over the top, isn't it? But in fairness to NATO's Secretary-General, he obviously has made his assessment. He gets on well with Trump, and he's just, I guess, assessed that you need to be totally over the top, as you say, in order to win over Trump. And they've been pretty successful, I have to say. I mean, the fact that he's sort of signed on with Article 5, about coming to the defence of each other, and said that he's changed his view after this meeting. It's pretty important, but also the spending commitments from Europe, 5%, is really, really important. And it's actually, there's a rebound effect on this as well. Not only is Europe going to help out the US here by taking on more responsibility for its defence, it'll probably end up helping Europe's economies, provided that they can deal with the debt issues, which they have significant debt, and obviously are going to need to do a lot more spending. But the industrial, activity and the employment and all that sort of stuff should actually be a stimulus for their economies to some extent. So that's been really positive. Spain obviously was singled out for some quite severe criticism there from Trump. I'm not sure why they did that. They're really only asking for trouble. But in general, it was a really positive meeting. I don't think, whatever NATO Secretary-General did in perhaps going over the top in terms of his praise of Trump, it worked nonetheless. And Trump has had a win, and Europe's had a win there.
Bloomberg editor Michael Heath there with the latest. And the Hong Kong Monetary Authority, in the meantime, buying $1.2 billion of local currency to defend its peg to the US dollar. Let's bring Garfield Reynolds, who leads our Markets Live Asia coverage. So there's still a bit of uncertainty when it comes to where that dollar trajectory is headed.
Oh, well, I mean, the broader dollar trajectory is very much for dollar weakness, but it is interesting to watch the Hong Kong dollar instead it's falling against the US dollar and risking falling out of its peg, hence the need for Hong Kong to buy its own dollar. That is a tension that's been brewing for some time, because in particular as the Chinese government, the main government, highlights its desire to have the yuan be playing a greater role globally, it comes to look stranger and stranger for the Hong Kong dollar to be pegged to the US dollar and pegged so tightly. The yuan does have, there are controls on where it goes against the US dollar, but those controls allow it to gradually move one way or the other, and it's gradually, in fact, been strengthening. But part of the setup is that the Hong Kong dollar is stuck where it is between 7.75 and 7.85, and the other things the PBOC are doing are helping to drive down benchmark borrowing costs on the short end, in particular in Hong Kong. So that's setting up the arbitrage opportunity that is pushing down the Hong Kong dollar against the US dollar, even if in a lot of ways you might think it should gravitate more towards the under 7.2 per dollar level that the yuan is at. So that's a long-term tension that they're going to face more and more often as things develop towards a weaker US dollar and a yuan that is playing a greater role on capital markets. So might not be the last time in the coming months when Hong Kong needs to intervene in this fashion.
Yeah, Garth, to your point about the dollar weakness, we're seeing it losing ground as you spoke against the backdrop of Wall Street Journal reporting that Trump might name the Fed chair successor to Powell earlier. I mean, what's at play here? Because markets have already sort of been betting for this.
Yeah, well, the play here is that it's another blow to the credibility of the US dollar, because the Fed's independence from politics has been a key part of why, it's a key dynamic for investors and for traders. Why are you willing to go to the US dollar before anything else? Well, it's got the deepest bond market, that helps. It's also got the credibility of its institutions and the idea that Powell will get shunted out and replaced by somebody more open to Trump's call for lower interest rates just in order to save the US government money on its borrowing costs. That's the kind of thing that's going to have traders saying, well, we might want to avoid the US dollar, or if we're going to buy US dollars, we're not willing to pay extra to do so. So you get, at the very least, a movement down in the price of the dollar against other currencies. Notable that this Wall Street Journal report comes after a US Republican senator was very pointed in his criticism of Powell at the testimony, or a US representative saying, Trump was voted in by millions, you were voted in by one person, i.e. Donald Trump, and he doesn't want you to go on doing what you've been doing, so
right.
What's your justification?
The other piece of news is, of course, the relaxation of capital rules. Did you expect that to have more of an impact?
Well, the impact was mostly priced in, it looks like, and I think it was noticeable that earlier on, a few days ago, we had some comments from the Fed, I think after the FOMC meeting, in fact, that they were moving more strongly towards the SLR changes. That didn't have a huge impact, and it highlights that just because banks will be able to buy more treasuries doesn't necessarily mean they will, especially when we are going into what's going to be a very fraught couple of weeks. We have the reciprocal tariff deadline coming at about July 9, and then before that we have the July 4 deadline for whether or not Trump's spending and taxation bill gets passed and how much that's likely to increase the deficit. That's another uncertainty. We also have the uncertainty of we get payrolls July 3 this time around on Thursday ahead of the July 4 US holiday. So it's going to be a very choppy week next week. Not too much of a surprise that banks and others aren't going to rush into treasuries absent a clear signal that, for example, rate cuts are coming.
Garfield Reynolds, who leads our Markets Live Asia coverage there. Coming up on the Asia trade, more on the Israel-Iran ceasefire with the Washington Institute. Xero CEO will be joining us too to talk about their $2.5 billion deal to buy Melio payments, plus Port Shelter Investment Management telling us why they're seeing signs of a market bubble. Much more ahead. This is Bloomberg.
And we continue tracking the Middle East conflict. President Trump says the U.S. will hold a meeting with Iran next week, but suggests that a new diplomatic agreement is unnecessary as U.S. strikes on Iranian nuclear facilities have obliterated them. Let's get more with Holly Dagres. She's the senior fellow at the Washington Institute. Holly, thank you so much again for taking the time. First off, it all kind of seems to be centered around the extent of damage of Iranian nuclear facilities. The Iranian Foreign Ministry has come out to say that there was bad damage. What is the signal you think they're trying to send to the international community?
Well, thank you for having me on the program. It's interesting that there's some conflicting reports there from the U.S. and the Iranian side. Of course, the Islamic Republic's an authoritarian government, so you're not going to get such an honest assessment from them. But we have satellite imagery that suggests that they have moved some of their enriched uranium, and they've also publicly said this. So even though U.S. President Donald Trump is saying that he obliterated the program, some of the initial assessments from U.S. intelligence, including the Defense Intelligence Agency, is suggesting that they've only set back the program by a few months. We're still, of course, waiting for more information from other intelligence agencies, but I think we have to take bits and pieces together and recognize that actually this program hasn't been obliterated after all.
Why do you think then the Foreign Ministry is indicating that there was bad damage?
I mean, there definitely was damage. They dropped a number of bunker busters that deeply buried Fordo, which is one of the, I would say, the crown jewel of Iran's nuclear program. And so it has set them back terribly, but to the extent where they can no longer rebuild a nuclear program, I would say that's not the case at all. They do have that ability, it seems like, from what we're understanding thus far.
Holly, and the other thing is you can't sort of bomb away that accumulated nuclear knowledge, right, even if key personnel and staff have been targeted and in some instances have been killed. Do you think this emboldens the regime from what we know of it, particularly the clerical establishment, in terms of even more sort of, ambitiously pursuing these goals?
Well, you brought up a great point. Yes, you cannot bomb away knowledge, and Iran has countless nuclear scientists that could fill the ranks. They obviously aren't institutionalized with deep knowledge, decades worth information, but there are people to replace these individuals, and they have replaced them in the past, because this isn't the first time that nuclear scientists have been assassinated. They've been assassinated way long years before this war began. So I think what really is concerning is that the Islamic Republic has spent hundreds of billions of dollars on this program. And as I noted, they've had their nuclear scientists assassinated, but it is a point of pride for them. When Iran first started enriching uranium in 2006, I was living there, and one of the big popular chants at the time was nuclear energy is our inherent right. I just can't see them giving in to what they believe is Israel and the United States as aggressors and suffering some sort of humiliation where they actually let go of this program in its entirety.
Particularly if there's also domestic uncertainties. We haven't really seen strong evidence of uprisings or protests or strong pushback. What's your best gauge of how much support there is for the leadership on the ground now?
Well, we've had a number of anti-regime protests up over the years. The most recent, of course, was the 2022 Women Life Freedom Uprising that was not successful in its goal of positive change because the international community did not back it. And so that sentiment has not changed on the ground. I would say majority of Iranians want this regime gone, but to expect them to go out in the streets during a 12-day war when the U.S. president is posting on social media, evacuate Tehran, in a capital city with over 10 million people, the size of the Los Angeles metropolitan area, is not very realistic to expect at this juncture.
Holly, really great to have you with us. Holly Douglas, who's a senior fellow at the Washington Institute. More ahead on the Asia Trade. This is Bloomberg. Well, Micron shares have paired gains in late trading after an upbeat forecast for the current quarter, helped along by demand for AI equipment. The company says fiscal fourth quarter revenue will be around $10.7 billion, exceeding analyst estimates. Micron is seeing increasing demand for components like its high bandwidth memory used in machines that develop and run AI tools.
NVIDIA shares closed at an all-time high in the meantime, cementing its position as one of the most valuable companies in the world. Market cap rose to about $3.77 trillion, overtaking Microsoft. At NVIDIA shareholder meeting on Wednesday, CEO Jensen Huang said demand remains strong and predicted a massive AI infrastructure upgrade for the computer industry. Staying with AI, Chinese spatial design software maker Manicore Tech says its business model isn't affected by U.S. restrictions on chip exports. Co-founder and chairman Victor Huang spoke with Bloomberg about how he's managing the global growth of the firm that is part of a group referred to as China's 6 little dragons. That includes DeepSeek.
Right now, we focus on the country like Korea, Japan, America, Southeast Asia. That is what we more focus on. And our strategy is we do PLG, product leads growth. Then we can see in which country the retention rate is higher. Then we will put more efforts on the high retention rate country.
Do you have some visibility right now?
Yeah, of course. We do pretty good in Korea, Thailand, America, and also India.
Right. India's a huge market. When it comes to the U.S., given the geopolitical challenges, are you feeling any of that strain?
I think for PRG it's okay. For PRG it's more consumer-based product, so just currently everything going well. I didn't have any trouble from the government.
Because we're always very concerned about these export restrictions and perhaps more tightening coming from Washington. Is that at all a concern for you?
I think it's not a big concern because we are not going to compete with large language model. It's a huge amount of high-end GPU. Our advantage is we accumulate a huge amount of just physically correct data that is so unique. So we can train our model slowly. So in that way, we don't need the biggest computing cluster.
When it comes to the future of your company, you mentioned different segments that are doing well domestically and also in the United States and globally. What is the overall ratio that you would think would be domestic versus other countries?
For long term, we hope 50% is from domestic and 50% from globally. But right now, the global income is about 10% of our revenue. We hope it will be growing faster. But actually, the online users, the PRG revenues is growing faster, much faster than domestic.
Oh, really?
Yeah.
Especially in America or in other?
Globally.
Like South Korea, you mentioned that
South
was
Korea,
good.
Yeah.
Manycore Tech co-founder and chairman Victor Huang there speaking with our co-anchor Sherry-Ann from the World Economic Forum in Tianjin. Well, China's rise in the global tech race is now the focus of our new show, Bloomberg Tech Asia. Catch a premiere on Friday at 8:30 a.m. Hong Kong time. That's at 8:30 p.m. Thursday in New York.
In the meantime, let's take a look at how the dollar is faring. We, of course, saw that slide as Wall Street Journal reported that Trump could name the successor to Fed Chair Powell earlier than expected. And, of course, this is markets' anticipation that this could continue undermining the Fed autonomy. Also, that the next Fed Chair could be a dovish one. So we're seeing that dollar impact. Separately, also hearing about how Bessent, of course, the U.S. Treasury Secretary, has said that the U.S. has extended the debt limit measures through to July 24th. And of course, this has been a key concern for markets as well, Heidi.
Avril, take a look at what we're watching when it comes to U.S. futures. This, as we see that Wall Street rally showing some signs of fatigue due to both economic as well as growing geopolitical risks that are still there, despite, of course, these assurances that the Middle East conflict for now is over from President Trump. We're seeing the S&P wavering near its all-time high, and Nasdaq 100 futures looking pretty flat at the moment. Some analysts, though, are still expecting the markets in the U.S. to reach new highs this year, driven by gains in tech and AI. Others are warning of some caution due to these ongoing uncertainties. Of course, we're also counting down to the expiration of those trade truce deadlines as well, and a great deal of uncertainty in terms of how potentially unresolved tariff tussles might feed into that outlook for inflation and for the Fed as well. JP Morgan Chase, for one, though, strategists there are doubling down on the view that US stocks is on track for a fresh record this year. More ahead on the Asia trade. This is Bloomberg. Well, as China's EV market gets crowded, the world's top battery maker, CATL, is looking overseas to supercharge its growth. We caught up with the Chief Manufacturing Officer, Ni Jun, at the World Economic Forum in Tianjin to hear how they're powering the next phase of the expansion.
Irrational competition, I will call. Everyone, the industry-wide and the government knew this is a problem, this is unhealthy, this will destroy the industry. So there's a lot of a sentiment to come up with regulations and policy to prohibit this kind of price war. And as a result, that also forced everybody to dig in. Can you further improve your internal efficiency and so maintain reasonable business margin to survive, to continue innovate? So as for that part, I expect they will
How are you doing that? How are you improving your efficiencies?
We are trying to do everything, improve the production utilization.
How is AI employed?
AI has been used. Actually, CATL has been embracing the AI revolution maybe 7, 8 years ago. At that time, it already started from simple, repetitive task and manual work. They try to use AI to capture, to do more efficient work. And now we're not only using AI to screen the material, because of different material, different chemistry, and also different design. And also during the stage of manufacturing, and also after the sales. So AI has been utilized to improve, make sure the process is stable, is under control.
Over the next 5 to 10 years, what would your ideal next generation super battery factory look like?
Well, I would say in the next 5 years, ideally, let's take on all the trade barrier, all the consideration. Ideally, it should be green, number one, because we want to save our planet. The factory, we actually already do extensive improvement. We reduce our energy consumption, reduce any of the emission, and recirculate any of the waste material will be recirculated into our production. That is number one. Number two, it should be smart, so that any human labor-intensive, dangerous task should be taken care by machines, by robots. By computers. So that's what we are saying. Also should be reconfigurable, because when you put that production, this is a capital-intensive facility. Yeah. When you put that production line, you don't want to see, after a year, the product, the end product, our customers' vehicle don't sell well. They say, we would like to switch that to a different vehicle. Right. Can you quickly, flexibly adjust, adapt to the new product? So that's our effort. We try to make it as user-friendly as possible.
How do you avoid the pitfalls of overcapacity that has affected the solar industry right now? And a lot of people in the industry are fearing that maybe there's going to be a battery overcapacity in the coming years. How do you feel about that? Well,
we don't look at that. We believe when the global community going to green, sustainable world, and there's a surge, the demand is drastically increasing. The key is a high-quality battery. Of course, you can, if you don't put a high standard, you can put a cheap battery. That capacity maybe is plentiful, but the consumer and our basically world-class OEMs in car industry, in energy company, they demand a high-quality, safe, and a long-life battery. For that, there's a shortage. Otherwise, we will not go to many parts of the world to make those high-quality batteries.
Would you say going overseas now because of the high
demand?
That's well, right. There's obviously, I wouldn't say the market is saturated in China yet, but there's a price war, obviously, which is brutal. Would you say, though, that your number one priority is kind of figuring out the international expansion?
That's right.
The best, I guess, algorithm for making it work. Is that your number one priority?
Yes.
CATL Chief Manufacturing Officer Ni Jun speaking exclusively with our Chief North Asia correspondent Stephen Engel in Tianjin. Now, China's highly competitive EV market is about to see one of its newest entrants, Xiaomi, launch its first SUV later today. Bloomberg NEF's latest electric vehicle outlook forecasts a 25% surge in global passenger EV sales this year, driven largely by Chinese demand. Ali Zadi leads Bloomberg NEF's Asia-Pacific coverage and joins us now from Seoul. So, Ali, as we heard earlier, highly competitive landscape. Does your team expect EV sales growth in China to continue beyond this year? And what about other markets?
Thank you very much for having me. Indeed, we do expect the sales growth in China to continue. Today, consumers in China benefit from the largest model choice availability for EVs in the world. And in most segments, the EV models that they can buy is actually cheaper than the equivalent internal combustion engine vehicle in that market. This is very unique to China. As a result of that, we saw last year China account for over 2/3 of global passenger EV vehicle sales, and that trend is going to continue for the remainder of this decade. So the share of sales for EVs in passenger vehicle segment in China was just under 50% last year. That number is going to reach 80% by 2030. In other markets, in absolute terms, of course, Europe remains a fairly large market, similarly the US. In Europe, share of adoption also grows quite rapidly, but US we see a lot of challenges. And then we are starting to see the competition among Chinese manufacturers benefit emerging markets as well, where we have seen exports from China, for example, to regions such as Southeast Asia, Brazil rise. As a result of that, markets such as Thailand now have a higher EV adoption rate than, say, Japan and the US.
Ali, what do you think are the most meaningful changes in this year's outlook compared to last year?
Yeah, thanks. So despite all the positive messages that I delivered earlier, this is the first time that our overall global sales outlook for EVs has declined. So in 2030, now we expect passenger EV sales to reach 39 million. This is about 3 million or lower than last year's outlook. The reason for this is, number one, the US. So in the US, all the policy changes that the Trump administration has undertaken means that now we're expecting passenger EV sales in 2030 to be roughly a little bit higher than 40% lower than what we were expecting in the previous outlook. Similarly, in Europe, we have reduced our outlook by about just over 1 million vehicle sales in 2030, primarily because there have been some delays in some of the more stringent measures, as well as launch plans by automakers. In emerging markets, though, by and large, our sales outlook has actually increased this time around.
Ali, what are some of the implications for battery makers?
Yes, so as we expect a slightly lower passenger EV sales, this means obviously battery demand will go down. From the energy storage stationary market, we expect higher demand for batteries, but overall, between now and 2035, our outlook for battery demand is about just under 8% lower than the previous outlook. What this means is that the competition and the overcapacity we've seen in the battery segment is going to continue. Today, for many battery manufacturers, their factory utilization rates is already below 50%. If you look at available production capacity for batteries, even if we derated to take into account in some cases the supply chain cannot keep up with the nameplate capacities, even that de-risked capacity is still about twice the demand that we see today. It's actually more aligned with our net zero scenario than with our sort of economic transition scenario for EV adoption.
Ali, thanks very much for coming in and sharing your research from you and the team. Bloomberg NEF Head of APAC Research, Ali Izzadi. Let's take a look at how stock futures are shaping up in the Asia Pacific as well. Of course, this follows on from what was a pretty flat session on Wall Street, save for the tech names, particularly NVIDIA, fresh all-time highs. We're seeing it flat on the S&P futures and pointing to some declines in Australia, the other direction potentially when we see the Japanese stocks. But the big story this hour, of course, has been how the US president might name the Fed successor to Chair Powell sooner than expected, that this could come as soon as October. And of course, Fed Chair Powell's term runs until the middle of next year. But this does raise bets that we could see not just a cut in September, potentially July as well. The odds of a dovish chair also putting the US dollar under pressure, Haidi.
Coming up next on the Asia Trade, we speak to the CEO of Xero about their biggest acquisition, the $2.5 billion deal for payments platform Melio. Sukhinder Singh Cassidy joins us next. This is Bloomberg. We'll be watching shares of cloud-based accounting software firm Xero when that trading halt, I should say, is lifted in Sydney after it agreed to buy Melio Payments for $2.5 billion. This is the company's biggest ever acquisition and part of a broader plan to push deeper into the US market. Joining us now is Xero CEO Sukhinder Singh Cassidy. Sukhinder, always great to see you. Tell us about sort of where this deal comes from and how you feel about the synergies in terms of bringing these businesses together.
Sure. Well, Melio is a leading bill pay software provider in the United States that does everything from bill pay workflows to processing the payment to then further integrating with your accounting software, as an example, for small businesses and accountants and bookkeepers in the U.S. One of the reasons we're so excited about the deal is, of course, it fills that critical 3x3 job we talk about alongside accounting. It's payments and payroll, managing invoices, managing bills. And so this is how the deal fits together with our current U.S. offering, which we think of as easy-to-use, intuitive accounting software, but we wanted to really bolster that scale, presence, capabilities with Melio.
What are the broader strategies in terms of bringing that big customer base into the ecosystem that exists for Xero?
Yes. Well, look, the combined companies today have 480,000 customers on day one post-close. But I think the biggest opportunity is the one you identified, to acquire customers of greater value faster by having both of these critical jobs integrated into the Xero platform. So our plans are reasonably simple, actually. We've acquired this incredible technology team capability. We will seek to integrate the offering into Xero, within the first 12 months, and then leverage, of course, Xero's larger go-to-market capabilities. We have a sales force that calls on accountants and bookkeepers. We, of course, have a great direct marketing presence in the U.S. So really not just to cross-sell to existing customers, but then lean hard on that go-to-market engine we have to drive the combined platform customer acquisition further, faster, with honestly better unit economics and lifetime value of the customer when they can do both jobs on Xero.
Sukhinder, I wonder if you'd be able to comment a bit on, potential for profit expansion when it comes to the U.S. market against the backdrop of this deal.
Yes, sure. Look, I think it's fair to say, first and foremost, this deal is about capturing more of the white space. Many customers yet to choose accounting software in the U.S. It's not nearly as penetrated as markets like New Zealand or Australia in terms of cloud accounting. And then also a lot of white space in digitizing B2B payments. B2B payments in the U.S. are hard. They're slow. They're fractured. They still happen by check. So first and foremost, we want to, of course, capture more of that market opportunity. But I think it is quite important, to your point, to recognize that as you bring the business from subscale to scale, you get the economies of scale. And we get to leverage, of course, the investment we've made in our go-to-market engine and accounting software. We leverage Melio's strong investment over the last 7 years in building out their software. And we do see that this will get the combined U.S. operation to scale and sustainable economics and ultimately break even faster than we would have been able to do alone. And that, in turn, fuels what we have given the market as guidance. Well, not guidance, our aspiration, really, that by FY28, we believe the company will be back above Rule of 40 with a significant acceleration of U.S. revenues and the global group more than doubling its revenue from FY25.
What about how the deal supports the 40 acquisition rule, given how, it's cash flow negative at the moment?
Yes, this speaks to what I identified more recently, or in our last commentary, which is that really on day one, what you really want to do is bring together, great software, and that is the day one plan. But as you put Xero's go-to-market engine against not just one product in our stack, but both products, you actually are competing for a customer who is worth a lot more, and that in turn gets you to very sustainable lifetime value of the U.S. customer and an ability to really then start leveraging back up, I'd say, the U.S. business and in turn the group to realize Rule of 40 again and expand profits from there. So really, this is very much first go capture more market with a better value proposition. And of course, the two platforms together get to scale faster and sustainable economics, in turn, again, fueling that profit expansion back above Rule of 40 and free cash flow generation continuing to, of course, increase throughout the period.
So, Kendall, what insights and view do you have of US businesses at the moment, given the ongoing economic uncertainty?
Yes, look, I mean, remember, we are not macroeconomists for a living. What we do is actually help small businesses manage times of uncertainty and certainty in their financial life. I think what we would say is all over the world, of course, the last 90 days have been one of volatility with regard to the tariffs, with regard to macro uncertainty. Despite that, I would remind you that for us, we are underweight exposure to the U.S. in our current global portfolio. If anything, we would say we have more opportunity, despite the backdrop globally, to have more SMBs use our software to manage through that uncertainty, not just survive it, but thrive. And again, if you think about this acquisition, Melio, it's really about optimizing cash flow, about money out, and making sure you have the flexibility to schedule your payments, pay as you would like, stretch your payments in order to optimize cash flow. So having that capability within Xero is actually quite important when you're talking about small businesses surviving and thriving, again, which is our goal for them throughout periods of uncertainty.
Sukhinder, always great to chat with you. Sukhinder Singh Cassidy, who's the CEO of Xero. We have more ahead here on the Asia Trade. This is Bloomberg. A DHL executive says global trade has shown surprising resilience despite uncertainties caused by Trump's tariffs. Aditi Rasquino is the Greater China CEO of the logistics giant's forwarding arm. She spoke with us at the World Economic Forum event in Tianjin.
Global trade has been pretty resilient. If we look at China's export growth in the first 5 months, it's grown about 7%. So whilst having said that, with the tensions and tariff scenarios, organizations are deploying different strategies. Some are front-loading and looking at taking inventory forward so they have it when demand peaks. Others are looking at alternative sourcing and manufacturing networks where they can in the short run. And yet others have a wait-and-see approach. So let's wait it out and see what happens with the tariffs and the rest of the situation.
On that front-loading, do you see a tangible increase while we're in a 90-day pause, which is running out already, but our shipments definitely spiking because we don't have the certainty following mid-August?
That's right. So it was the spike in order to hit that 90-day window. So we're not sure what's going to happen after that period of time, but we do believe at some stage was to meet that window.
What are you seeing on the de minimis exemption that the Trump administration has essentially done away with, that $800 shipment exemption?
Right.
Have you seen a complete drop-off?
Yes, e-commerce has actually would have been the one that has had a little bit more of uncertainty of not knowing how to deal with the technology on the other side when it gets to the customs, right? So it's been on both sides for the customs regulation to figure out how they're going to handle it once the shipment arrives, but also for the organizations moving to know how to deal with the situation. So everyone's working on solutions right now to address the de minimis.
How much of a sales drop are we looking at between China and the United States?
Honestly, it really depends on the sector that it is. E-commerce has had the biggest hit, but if you look at the tech, like Apple's, Dell's, HP's, organizations like that, they're still flowing in the same form as they've gotten exceptions from the tariffs.
You mentioned about diversification. How are you seeing corporates, individuals, or mostly corporates, I would say, probably diversify from their shipping to or from the United States away from the more heavily tariffed China?
So Depends again on the sector or industry that organizations are in. So those impacted by tariffs look for alternative sourcing locations, and you see a bit of shift into Southeast Asia. You see a bit moving to the Middle East, Africa, Latin America. So it has been a varied amount of setups. There are those that still believe that China is the most cost-effective model that works for them. And usually the shifts of a production into Southeast Asia is to move to the US, and for the rest of the world and intra-Asia and within China, consumption generally stays in China.
DHL Greater China Executive Aditi Raskina with our Chief North Asia correspondent Stephen Engel. Let's take a look at how currencies are faring. Of course, amid the trade war, what's really been done is the question swirling around U.S. exceptionalism. Now with the concerns that we could see an earlier pick for Fed chair, does this undermine further Fed independence and cause traders to turn even more away from U.S. assets? Suddenly we're seeing the dollar sinking. Here in the Asia Pacific, a couple of pairs that we're watching out for. Dollar Sing dollar that is approaching this year's lows, and this would give us a clue as to whether traders see further bearishness on the greenback if this level that you're seeing is breached. Heidi.
Yeah, take a look at some of these geopolitical related commodities that we're watching. Oil at the moment has been an interesting trajectory. We're seeing that climb. New York traded crude up over $65 a barrel now after President Trump had reaffirmed his maximum pressure campaign on Iranian oil, mentioned upcoming talks with Iran there as well. Iron ore is edging towards potentially the pricing test of the year as we see that pickup in supplies when it comes to seaborne supplies and lower steel production pressures from China.
This is the Asia trade. We're counting down to Asia's major market opens. And Heidi, there are a couple of drivers we're watching today, including defense spending, potentially what we are expecting as well when it comes to some of the chip names in the Asia Pacific, but Fed independence, another key theme that we're keeping an eye on in the session.
That's right, with that reporting that potentially we see that moving forward of the time frame for President Trump to appoint the successor to Chair Powell, given the ongoing consternation that we hear from the White House in terms of the time frame, right, that we're seeing from the Fed in terms of moving forward with those rate cuts.
Certainly, let's take a look at how the Japanese markets are shaping up. We saw stocks, another day of gains already. So there is a bit of that risk on, though, given the handover we got from Wall Street overnight, looking pretty flat, save for the tech sector and Nvidia. It does make you wonder with this upcoming tariff deadline, the extent in which we will see further gains in Asia stocks. We're seeing gains for the moment, but really not by much. And of course, that big story about the dollar moves lower against the backdrop of the Fed chair, potentially his successor being named a bit earlier. Does this undermine Fed independence? Does this raise the bets of a July 25 basis point rate cut? We're seeing the dollar sliding and the yen is still holding it around the 145 handle. We also did get some of the BOJ messaging from a day ago. Even the most hawkish member does seem to have concerns about whether these rate hikes will come given the tariff uncertainty. Now flip the board and take a look at what we're seeing in South Korea as well. It's a lot of that AI optimism that's been building through. Certainly, we are watching for the NVIDIA suppliers such as SK Hynix and some concern that, their U.S. access to chips might be curtailed. But really, given how AI demand does still seem to be very strong, will that help to offset some of those worries? We're seeing the Korean won also firming up against the greenback. Heidi.
Take a look at how we're setting up when it comes to that staggered start to trading here in Australia. This is a picture. We're seeing a little bit of downside there when it comes to Aussie stocks. We're watching some of those energy names as we see oil prices continue to climb sort of above that $65 a level. Some of these geopolitical concerns clearly still at play here as well as supply concerns with the inventory reports that we've had this week. But at the moment, we're seeing a pretty flat start to trading here in Australia. The Aussie dollar, though, still holding on to those gains amidst that backdrop that we've had of a pretty rocky path path for the greenback. 65.20 is how we're trading at the moment. We'll also be watching for Xero as we get to that part of the trading session after that Melio acquisition as well. Watching treasuries, which had seen a little bit of a boost there over the past couple of days, but that yield curve steepening as traders continue to boost their bets on Fed cuts. So shorter-term treasuries, I should say, outperforming in what was ultimately still a pretty volatile session. Of course, more added volatility with these concerns over when Chair Powell might be replaced and when those names might be announced. But take a listen to what the Fed chair had to say.
The question is, who's going to pay for the tariffs? Originally, it's the importer, but it gets passed along through the distribution change to some extent to the consumer. The ultimate question of it is how much of it does show up in inflation. And honestly, it's very hard to predict that in advance.
Let's get more on markets with Richard Harris, CEO of Port Shelter Investment Management. Good to have you, Richard. We meant to talk to you about what we're seeing in the inflation trajectory potentially in the second half, given the tariff uncertainty, but we're also getting messaging that potentially we see an earlier naming of the Fed chair successor. I mean, what does this mean overall for U.S. assets?
Well, it's really, of course, very uncertain, as everybody's saying. You know, if Chairman Powell is uncertain about the direction of inflation, you know, what hope is there for the rest of us? I think what we've seen is a lot of data delay in terms of things coming through. Of course, many of the tariffs haven't actually been imposed yet, so we don't really know what the situation is. The White House is basically saying, look, even Biden did studies on tariffs and inflation and found that, you know, there was very little impact because the exporters took the blow. But that's okay when tariffs are 2%. It's not okay when tariffs are 30%. And certainly business people I'm speaking to here in Hong Kong are basically saying, we can't cut anymore. We've already shaved off our profits. You know, we can't make losses. So those costs are going to be passed through to consumers. And as Chairman Powell said, they're going to be the people who are hit first are the importers, so they've got to find cash actually to pay Uncle Sam up front. The big question, I think, and the big elephant, or maybe the big stampede of elephants in the room, is what exactly is going to happen on 9th of July? Will we see another Trump taco? Will he chicken out? Will he delay again? Or is he going to be firm this time and say, yes, they're coming in?
Richard, wonder as well what you think about the Fed's role in perhaps helping to offset signs of economic weakness or uncertainty. I mean, there seem to be increased bets of potentially we could see a 25 basis point come July. How much does it matter for markets?
Well, I think 25 basis points is neither here nor there. The U.S. has still already got quite a big premium in terms of their interest rates compared to Europe and other places, which have been cutting quite regularly. I think that the U.S. does have a secret weapon in terms of their interest rates at the moment, because if we do see a recession, there is a lot of room to cut. We're nowhere near a zero interest rate policy or anything like that at the moment. So the fact that rates have been held by the Fed has provided them with a lot of ammunition for the future. And it has to be said that markets look fragile at the moment. They almost look as if they're in bubble territory. So it could well be that if we see a big fall and weakness in the economy, that that headroom that interest rates currently provide could be very useful.
You're talking about fragile, but also you could say that there's a complacency, right? Do you worry that markets are generally too quick to kind of price out some of these risks, even when there's not a great deal of certainty when it comes to either geopolitics or trade or sort of economic fundamentals going forward?
Well, that's right, Heidi. I mean, bull markets die hard. We've had generally bullish sentiment for a decade or more, and I think that we're still there. I think that what we've seen is a big shock when Trump first came in with his tariffs, and with a lot of other initiatives as well, like the Big Beautiful Bill, National Guard going to California. All of these things have caused the market to stop and say hold. But we've also had a lot of little bits of good news. We've had little bits of good news, tariffs delays, tariffs reduced, deals with China. But the bottom line is the situation is still quite fragile. We don't really know what's going to happen in terms of the tariff renewals. We don't really know what's going to happen with China. But what we do know is that if we're looking at tariffs on China, say 25% at the moment, pushing them up to 55% is going to be pretty serious.
What opportunities then regionally do you see?
Well, I think it's much more difficult because clearly if the US weakens, then we will see weak markets everywhere. You know, that's just generally how it happens. But I say, go back to what I said a moment ago, which is that the US does have quite a lot of headroom in terms of reducing rates. And I think that we may well see the market take on board that fact. If we see rate cuts on a fairly regular basis, then I think markets will hold up. So my base case is that actually we're going to see markets reasonably high for a little while as these things come in, as maybe the Fed cuts. But the markets are still very fragile, very exposed to an external shock that will hit economies. Not geopolitical shocks, as we've seen. They don't seem to do much. But shocks that may hit economy, maybe sharp rise in oil prices, sharp increase in unemployment, those kind of things. And those are the indicators that I'm looking at.
Richard, always great to have you on with us. Richard Harris of Port Shelter Investment Management, urging some caution there. One of the stocks that we're watching, and certainly a lot of cautious sentiment when it comes to this name trading in Australia as we come online in full. Xero falling. We're off our session lows, actually. It fell by as much as 9% earlier, but off by about 7% after Xero reached that deal to acquire Melio payments for $2.5 billion. This is a combined business that's expected to accelerate revenue growth in the US market. That $2.5 billion deal with an additional $500 million in performance and other payments over the next 3 years as well. So Xero, the cloud-based accounting software firm, agreeing to buy Melio payments there. A little bit of downside as we see that trading halt lifted, Avril.
Yeah, certainly, Heidi. Going the other direction overnight on Wall Street, we saw Nvidia clocking fresh record highs, and its market cap now about $3.8 trillion. It's toe-to-toe with Microsoft. We had price target upgrades and the talk about maybe we see it reaching $6 trillion in market cap. Certainly, AI demand backdrop does seem strong and is offsetting some of these geopolitical concerns when it comes to the chip play in the Asia-Pacific. Its suppliers in the Asia-Pacific also getting a bid, especially when it comes to SK Hynix, which of course has a big play when it comes to its dominance in high bandwidth memory chips. Samsung Electronics sliding a little, but also keep in mind that when it comes to the tech plays, we have been seeing a bit of mixed signals when it comes to Micron as well, which turned negative at some point after hours despite giving an upbeat forecast. More ahead on the Asia trade. This is Bloomberg.
In a very historic milestone this week, the NATO allies committed to dramatically increase their defense spending to that 5% of GDP. Something that no one really thought possible. And they said, you did it, sir, you did it. Well, I don't know if I did it, but I think I did.
President Trump speaking at The Hague after most member states agreed to raise military spending to 5% of GDP. Take a look at defence shares trading at the moment as we continue to watch for any sort of reaction. They're giving really the charm offensive that NATO and allies have been on to try and bring President Trump back on board. Seeing broad upside there when it comes to those drone makers and other big names like Hanwha Aerospace, up by about 1.5% as well. Let's bring our Bloomberg editor Michael Heath for more. And it really was a charm offensive, right? You know, there were sort of, state dinners and lots of platitudes as well. Do you think it worked to kind of fundamentally, I guess, rebase that relationship that's been so fractured?
Yeah, look, it does look like it's worked on both sides, Heidi. I mean, there's a bit of a sense sometimes with President Trump that he has a certain prejudice he takes on, and then when he's, when he faces up to the reality, he will adjust. But that said, Europe did really roll out the red carpet, as you mentioned, staying in palaces and with royalty and all these sorts of things. But the most important thing is this commitment to 5% of GDP, spending that on their defence. I mean, it's a lot of money, and it is important that they do that, particularly with a revived Russia in terms of military expansionism. It might be a little bit overrated, the actual threat to Europe from Russia, given Russia over 3 years couldn't even beat its smaller neighbour in Ukraine. But nonetheless, there is a definite threat there, and NATO has stepped up. We have Spain and Slovakia as potential outliers there, but Germany's talking about building the biggest conventional military in Europe, which once upon a time would have sent terror through everyone. But it's really, really significant that they're doing that. They're the biggest economy, obviously, and Trump walks away with a win. And most importantly for everyone is this commitment to Article 5, that an attack on one NATO member is an attack on all, and that's really what scares off any potential enemy of NATO. And the fact that that seems to have been reinforced is really good news on all fronts. So a bit of a win for everyone there, really.
Mike, Trump is also setting US-Iran talks for next week, casting some doubt about whether there needs to be some sort of diplomatic agreement when it comes to the nuclear side of things. But what do you think actually realistically can be achieved by both sides in the talks?
Well, Avril, I think the main thing here is that, does Iran actually want a civil nuclear program? Because if it does, and if both sides are prepared to be reasonable, and it seems the US certainly is prepared to be reasonable, the question is just about enriching uranium, and can they organise something where Iran has that, the level needed for a domestic nuclear energy program, that's shipped into Iran, and it can then proceed with that? Because the worry's always been about the domestic uranium enrichment, and Iran has been doing it to a higher level than has been needed for a civil program, not as high as for a weapon, but not too far off as well. So that's sort of that whole enrichment sort of issue is going to be at the heart of it. The other question, of course, though, is just how much damage has been done, and we've had this debate. President Trump getting very quite irate about reports that not as much damage was done as had been hoped for. But then again, you have the UN nuclear watchdog, you've got Israel, and others sort of saying that it does seem to have been reasonably significant, the damage done there. And it's also very early to make an assessment. I mean, really, there's a report of Israel having some intercepts of Iranian communications, and even they're not quite sure what the state of things are at this stage. So on the talks, I think it's trying to get that, if everyone comes with goodwill, trying to work out a way to have a civil nuclear industry in Iran with no threat of weapons, and then just whether the whole weapons program has been put to bed. They're the crucial issues. Now, whether Iran wants to play ball is a whole other question. I mean, they feel betrayed by the UN in terms of not protecting them. They've always said they're not trying to get a weapon there. So that's really up in the air. And also with Israel, does it feel like we have put this to bed, or does more need to be done? So there's a lot of unanswered questions still there.
Bloomberg editor Michael Heath there. Let's get more with Alan Ayer, who's a distinguished diplomatic fellow at the Middle East Institute. He served in the US Foreign Service for 40 years, was a core member of the US nuclear negotiating team under the Obama administration. Alan, great to have you with us. And, in fact, all of those questions that Mike just sort of listed for us, what the reality is when it comes to the damage that's been done, how much good faith is there going into any potential negotiations? Will either side really come to the table? Will Israel kind of, trust any undertakings that Tehran makes from here on forwards? What are your views on how, enduring this ceasefire going forward can be?
Those are all very good questions. My bottom line is I think that, unfortunately, the prospects for a diplomatic solution are very slim. I think the United States, in many ways, as President Trump indicated, has gone past this. He says the nuclear program is obliterated. He feels he's done the job. He said it really is not that important whether we come to an agreement. So it's unclear what U.S. negotiators will be trying for when they meet with Iran next week. It seems previously the red line for the U.S. was no enrichment on Iranian soil. I don't think U.S. red lines are going to get any softer. if anything, they might be a little more triumphalist because of all the damage done to Iran. For Iran's side, yeah, they have zero goodwill. They have zero trust. They've been attacked by Israel and by the United States. Both Iran and Israel still, I'm sure, see themselves in a state of war. This is a ceasefire. So there's no indication Iran has softened its red lines. And let's not forget, the driver of all these events is Israel, in the sense that Israel does not want the United States and this Islamic Republic of Iran to come to any sort of deal that limits its freedom of action in terms of continuing strikes in Iran as needed. Israel has said that it's willing to attack again if it feels the need.
Well, particularly if it feels that the existential threat posed has not been eradicated, right? What does a potential diplomatic track process even look like at this point? Does it need to go hand in hand, or do we need to wait for nuclear inspections to be allowed first and foremost?
Well, first of all, I don't know to what extent we can talk about an existential threat, because all indications are Israel was planning this for a very long time. Prior to these hostilities, Iran, at least according to the intelligence community assessment, was not seeking to weaponize. In terms of going forward, what the diplomatic track is, it's totally unknown. We don't know what Steve Witkoff is going to put on the table. Previously, there had been an idea of a consortium to enrich uranium outside of Iran. That was a non-starter for Iran. I think what President Trump and Mr. Witkoff have said is that Iran can make a course change, join the League of Nations, flourish economically if it joins the international community. At this point, Iran wants the ceasefire to continue so it can catch its breath and assess the massive damage it's experienced. And in a longer term, I think Iran is going to try to rebuild its strategic deterrence that's been totally destroyed by Israel. Whether that includes increased desire for a nuclear weapon, that's a big question. But if Iran pulls out of the NPT or suspends cooperation with the IAEA, that's going to drastically reduce our visibility into what Iran is doing with its nuclear program, which will increase concerns in the international community exponentially.
I was just going to ask, Alan, is the bigger point here potentially that at least the US and Iran are potentially going to be talking? I mean, how do you think the Iranian leadership is going to be engaging with Trump's style of leadership?
I think that for the Iranian leadership, they have zero trust in whatever President Trump, will put on the table. I think this recent experience has reinforced their previous suspicion that both Israel and the United States, which Iran sees as working hand in hand, are seeking regime change. So regardless of what the U.S. puts on the table, I think it's going to be very hard for Iran to generate the requisite trust going forward. Conversely, any sort of proposal the United States puts on the table is going to require almost draconian verification measures on Iranian soil by the IAEA. And there again, I don't think Iran has shown any indication that they're willing to be more flexible than they were before the start of the war.
Can you give us a bit more insights as to how Iranian elites at this stage are thinking of potentially then wielding that leverage, their nuclear resources?
Well, they have none. So, I mean, this is the problem. Their strategic triad of deterrence was their network of proxies, which Israel decimated, its missile force, which has taken a huge hit, and the possibility of a nuclear weapon. And their nuclear infrastructure has been set back, and we can argue how long, but for a very long time. So the three traditional pillars of their sort of strategic deterrence stool, they're all gone. So they don't have a new strategy. They're just, I think, quite relieved that the hostilities from Israel have stopped, because they were getting the worst of that. They were inflicting some damage inside Israeli borders, but they suffered far worse than they were able to inflict on Israel. So they just need a breather. And now that that's happening, they want diplomacy to continue as long as possible, just because that means they're not being bombed again. In terms of how quickly they try to reconstitute what they have lost, I think, as soon as possible. In terms of whether they try to sprint to a weapon, unclear. But don't forget, they don't need to rebuild everything that's destroyed. If they, in fact, decide to seek a nuclear weapon, that's a vastly smaller program and less expensive.
Alan, really good to get your insights. Thank you so much for your analysis. Alan Ayer is Distinguished Diplomatic Fellow at the Middle East Institute. More ahead on the Asia trade. This is Bloomberg.
Take a look at how European futures are opening up for the session. We saw those losses being led by weakness in Spanish equities after President Trump suggested the country could face tariffs twice as high from the US. This as NATO members agreed to raise their spending levels to 5% of GDP. We saw after that decline, the Eurostoxx 600 index about 0.7%. Eurostoxx 50 futures are modestly higher at the moment, seeing German DAX futures also seeing a little bit more upside along with the euro. This as we saw some sort of appeasing from NATO members to the US president in terms of those spending levels. But still, of course, that additional defence-related spending didn't appease things when it comes to Spain's declining to sign that new threshold, Avril.
Yeah, Haidi, I mean, this defense spending, I guess, adds to the sense of questions about fiscal sustainability. That's one of the key prongs in which investors sort of turn tail on U.S. assets earlier in the year. So we're seeing, interestingly, treasuries taking up against this backdrop, of course, against what we're hearing headlines from the Fed chair. You're watching the Asia trade. Hong Kong's de facto central bank has intervened in markets to prop up the local currency and defend its peg to the US dollar. It's the monetary authority's first such move in more than 2 years. Let's cross over to Hong Kong and our China correspondent, Min Lo. So, Min, we've actually been seeing moves on the Hong Kong dollar both ways, right? Pressures on both sides recently. But now this step in from the Hong Kong Monetary Authority to defend the peg.
That's right. You look at what we are seeing here, we're actually seeing the fastest slump in a month since 1983 when the currency peg began. So we are right here now at the highest end of the trading range, 7.85 per dollar. And that's why the Hong Kong Monetary Authority is stepping in to buy $1.2 billion worth of local currency to prop up the currency. But look where we are. Just a month ago in May, we were at the weakest end of that trading range, 7.75 per dollar. That's when the Hong Kong Monetary Authority also stepped in to intervene in the opposite direction. And so that's where there was an immediate impact in the HIBOR rates. If we show the HIBOR rates first, you can see actually that the interest rates immediately fell by the fastest pace since the global financial crisis. And what this does is it led to that growing spread. Here you see it's very, very low. We're not too far from zero. It's gone up a little bit, but still not too far from zero. And that means that the spread between the rates for Hong Kong dollars versus US dollar is at the widest on record. And that really fueled this carry trade, the most rewarding carry trade that we have seen last month. And that's why the Hong Kong dollar weakened. So the question now when the government intervenes is that we will see interest rates go up again. And will that undermine then the nascent recovery that we're seeing in the property sector as well as the rebound in Hong Kong listings as well?
It also gives rise to the question that comes up every now and then whether the currency peg has outlived its usefulness, whether this is a natural time for authority to perhaps expand or look at expanding on both ends of that flexibility.
That's right. There has been no shortage of suggestion to maybe abandon or reform the currency peg, whether it's widening the permitted trading range or creating a floating exchange rate or even maybe anchoring to the yuan. And you look at what the US dollar has been doing. It's been pretty weak, trading below 100 for the past month or so, and yet Treasury yields remaining pretty high because the Fed hasn't been able to cut rates. And because of this divergence between dollar price and rates, that's creating more volatility for Hong Kong dollar and rates as well. So we could see maybe maybe increased frequency for the need for the Hong Kong Monetary Authority to intervene. And I want to show you this chart, courtesy of M Life's Mark Cranfield, and you can see that Hong Kong rates is actually converging much more closely with the yuan rates rather than the US dollar rates. And the question then is, this is quite unprecedented. It's actually a very interesting move. Question then is, are traders actually speculating that perhaps the currency peg is outliving its usefulness, and maybe the next natural alternative is to anchor it to the yuan? Of course, some people say that is still a stretch, but interesting move here. But what is clear from the Hong Kong government is that Chief Executive John Lee has said that Hong Kong will maintain the peg for now because it is still the key factor that is contributing to the success of the financial hub and the open economy here. But of course, the downside is Hong Kong will continue to be sacrificing and be at the mercy of the Federal Reserve's policies.
Bloomberg's China correspondent Min Min Lo there. Let's take a look at how equity benchmarks are trading at the moment, this Thursday session in Asia, as we see that rise really being lifted by some gains that we're seeing in the Japan session, I should say, in particular. This as we also continue to watch that sort of further diminishing of geopolitical risk, as President Trump says that this latest Middle East conflict is over and looking ahead to potential diplomatic track negotiations there. This is the picture as we see the Nikkei 225 doing most of the heavy lifting there, about 0.8%. Having said that, we've had a few really strong sessions when it comes to Korean equities, so taking a little bit of a back step there, 0.3% softer for Korea. Broadly, we're seeing Asia-Pacific shares advancing about 0.3%. Some weakness there when it comes to Aussie stocks, as well as some weakness or flat trading for US futures.
Yeah, Heidi, and given, as you say, those diminishing geopolitical risks, this also allows investors to refocus on the optimism surrounding AI demand. Certainly that played out overnight on Wall Street with NVIDIA hitting those fresh record highs. Its suppliers are tracking those gains as well in the Asia session. SK Hynix is outperforming along with the likes of Japan's Avantis, and potentially also helped along by the idea that some of the geopolitical concerns that could target these chip makers or chip-related companies could be offset by this really strong AI demand and optimism that we are seeing. Now, in the meantime, China's rise in the global tech race is in focus in our new show, Bloomberg Tech Asia. Catch the premiere at this time tomorrow, 8:30 a.m. Hong Kong and Singapore. That's 8:30 p.m. Thursday in New York. More ahead on the Asia trade. This is Bloomberg. As we watch for the open in China trade, one of the big stocks we've been keeping an eye on, Xiaomi, as it shares near a record high. And of course, it's also in focus today because it's going to be unveiling its first electric SUV, the YU7, which is a direct competitor to Tesla's Model Y. Its shares have surged 64% this year as it becomes an investor darling with its high-stakes bet on the auto market. Our Asia Equities reporter Charlotte Yang joins us for more. So Charlotte, a lot of attention on this company, breaking into the EV space. What are the things that investors are watching out for with the SUV launch?
Yeah, so Xiaomi will be hosting this, hours-long product launch tonight, and there will be many products launched. The smartphones, the pad, but all everybody's watching really is the SUV, and specifically how this model will be priced. Because based on, from the analysts, based on the initial reactions we've seen, that consumers already reacted pretty positively about the specifications and the looks of the model. But pricing is really what's going to help determine how the demand will be, given how competitive China's EV market will be. So far, the most of the estimates expect the model's price to range from 250,000 yuan to 330,000 yuan. That's going to be in the more premium segment versus the first model. But that's in comparison, you have Tesla's Model Y that starts around 260, and also BYD's Tang L SUV electric version. That's also which is smaller than U7. What sells between 240 yuan and 280,000 yuan. So if we have a pricing below lower than the estimates, I think that would be a big positive catalyst for the stock. And also, investors will be watching, how the consumers' orders will come in the first 24 hours, in the first 7 days. Because if you still remember the first model, actually they had like around 90,000 orders in the first 24 hours. So I think investors will be using that as sort of a benchmark.
How important is the success of this SUV model then for any further upside, given the valuations? Are there catalysts that are going to be key?
Yeah, so Xiaomi shares, with all the investor love, has become one of the most expensive tech stock in the, in the China space. The shares are trading at nearly 30 times for the estimates. That's almost doubling the level of Tencent, also more expensive than Apple. So I think so the SUV's orders will be really, really important because Xiaomi also had this, pretty ambitious target, I think, to have its EV business turning profitable in the second half. So having that production scale is really important for the EV business. And also, more importantly, I think why some investors have this long-term buy thesis for Xiaomi is that they see it as a company, the likes of Apple and Tesla, which you can make both phones and also the EVs, and you can connect everything a consumer has. That kind of connectivity, but it all depends on that the SUV model will be selling well.
Our Asia Equities reporter Charlotte Yang there looking at Xiaomi. Well, the World Economic Forum's annual meeting of the new champions, of course, we refer to it as Summer Davos, is continuing in the Chinese city of Tianjin. Our Chief North Asia correspondent Stephen Engle joins us now from there. Steve.
Yeah, that's right. So yesterday I had a wide-ranging conversation with CATL. Of course, we all know it's the world's biggest EV battery maker. They had that big Hong Kong IPO recently, raising more than $5 billion US. So I was asking the chief manufacturing officer, Ni Jun, about that in that wide-ranging interview, about now that you have this war chest, what are going to be the priorities at a time when, of course, Charlotte was just talking about the pricing is so key to these new models, including the new one from Xiaomi. There's been a drastic price war in the EV space in China domestically, and that's driven down, put some huge pressures, of course, on the supply chain throughout the EV supply chain, including on batteries. That's why Ni Jun tells me that going overseas is going to be a top priority, even though, because they already have that big factory in Germany where the price per square foot in their factory is so much higher than their factories in China. So they are going to be opening up a new factory in Hungary. They've learned a lot of lessons from their mistakes in Germany. They're going to apply a lower cost model in Hungary. They also have a joint venture plant about to be christened in Spain. They also have another factory that will be inaugurated later this month in Indonesia to be closer to the mines and materials and the supply chain there. This is what Ni Jun had to say about the price war and its impact on trying to drive up efficiencies in the battery making process.
Irrational competition, I will call. Everyone, the industry-wide and the government knew this is a problem, this is unhealthy, this will destroy the industry. So there's a lot of a sentiment to come up with a regulation, a policy to prohibit this kind of price war. And as a result, that also forced everybody to dig in. Can you further improve your internal efficiency and so maintain reasonable business margin to survive, to continue innovate? So as for that part, I expect they will.
How are you doing that? How are you improving your efficiencies?
We are trying to do everything, improve the production utilization.
How is AI employed?
AI has been used. Actually, CATL has been embracing the AI revolution maybe 7-8 years ago. At that time, it already started from simple, repetitive task and manual work. They try to use AI to capture, to do more efficient work. And now we're not only using AI to screen the material, because of different material, different chemistry, and also different design. And also during the stage of manufacturing, and also after the sales. So AI has been utilized to improve, make sure the process is stable, is under control.
Over the next 5 to 10 years, what would your ideal next generation super battery factory look like?
Well, I would say in the next 5 years, ideally, let's take on all the trade barrier, all the consideration. Ideally, it should be green, number one, because we want to save our planet. The factory, we actually already do extensive improvement. We reduce our energy consumption, reduce any of the emission, and recirculate any of the waste material will be recirculated into our production. That is number one. Number two, it should be smart so that any human labor-intensive, dangerous task should be taken care by machines, by robots. By computers. So that's what we are saying. Also should be reconfigurable, because when you put that production, this is a capital-intensive facility. Yeah. When you put that production line, you don't want to see, after a year, the product, the end product, our customers' vehicle don't sell well. They say, we would like to switch that to a different vehicle. Right. Can you quickly, flexibly adjust, adapt to the new product? So that's our effort. We try to make it as user-friendly as possible.
How do you avoid the pitfalls of overcapacity that has affected the solar industry right now? And a lot of people in the industry are fearing that maybe there's going to be a battery overcapacity in the coming years. How do you feel about that?
Well, we don't look at that. We believe when the global community going to green, sustainable world, and there's a research, the demand is drastically increasing. The key is a high-quality battery. Of course, you can. If you don't put a high standard, you can put a cheap battery. That capacity maybe is plentiful, but the consumer and our basically world-class OEMs in car industry, in energy company, they demand a high-quality, safe, and a long-life battery. For that, there's a shortage. Otherwise, we will not go to many parts of the world to make those high-quality batteries.
Would you say going overseas now because of the high demand?
That's
well,
right.
There's obviously, I wouldn't say the market is saturated in China yet, but there's a price war, obviously, which is brutal. Would you say, though, that your number one priority is kind of figuring out the international expansion?
That's right.
The best, I guess, algorithm for making it work. Is that your number one priority?
Yes.
Not necessarily expanding with manufacturing in the United States, but they are exploring and doing more of a licensing agreement with automakers in the United States. And of course, they do supply Tesla in the Gigafactory in China with the lithium iron phosphate batteries. But with that war chest I mentioned earlier on, they're also expanding into robo-taxis. They have a new joint venture there, as well as embodied AI, humanoid robots with another company in China called Galbot. That's an interesting development, and that is something I'll explore in greater detail tomorrow when we have a bit of a story on physical AI or embodied AI and how that is being pushed across the supply chain in China.
All right, looking forward to that. Bloomberg's chief North Asia correspondent Stephen Engel for us there. Up next, the Labubu craze has gone global, but its popularity is in jeopardy as copycats and knockoffs flood the market. A look at Pop Mart's biggest threats next. This is Bloomberg.
Well, of course, Labubu has become a global pop culture sensation, but other Chinese companies are looking to give Pop Mart's famous dolls a run for their money. For example, Miniso has come up with its own character named Wakuku, and many other Labubu copycats are also flooding the market. A Bloomberg opinion columnist Julie Ran is with us to discuss whether Pop Mart can hold on to its monstrous market lead. So lots of analysis and research has gone into the exact appeal of Labubu, who's buying them, how they sort of fit into the broader macroeconomic outlook for China. What's your take?
So ironically, Labubu got popular in Southeast Asia first. Blackpink's Lisa became a fan, and then what you saw was like the Thais and the Singaporeans, the Indonesians, they will actually come visit mainland China to go buy Labubu. But lately, Labubu has taken off in China as well. I think the demographics of people, basically the kind of people who are buying Labubu has changed. A year ago, you see a lot of kids, young kids, they were throwing tantrums at Pop Mart stores wanting their parents to buy them. But these days, adults start to buy Labubu, and there's a new category that I call Labubu moms, basically kind of like soccer moms. They have Chinese schools have established that the Labubu is the #1 toy that the kids like to hang around with, right? And then the Labubu moms, they will start buying them. Also, like fashionistas, they are buying Labubu because the running joke is that you need one Labubu to hand off one Birkin bag. So how many Birkin bags do you have? And you should have Labubus to match. Private bankers, they are using Labubu as gifts to their clients. So what we are seeing is a complete different demographic of buyers coming in for Labubu, and they have very different purchasing power.
Actually, I would just say that I was not one of the Southeast Asians jumping into those Labubu trends, but we've really been seeing the company behind it surge in terms of share price, market cap. Can it maintain the lead in this designer toys business?
There's certainly a lot of copycats because Pop Mart is highly, highly profitable. I mean, gross profit margin is 67%, twice as many as generic toy makers, right? Even operating profit margin is over 30%. So it's very lucrative business, and everyone wants to get in. The question is whether Labubu can maintain its brand image and whether it can be seen as a collectible, right? Like when we talk about luxury products like Birkin bags or Guizhou Maotai Baijiu, there is not so much supply in the marketplace, and I think Pop Mart has to be very careful not bringing too many toys to the market. And also, it's important for Labubu to have a secondary market. And right now, like if you go to a Pop Mart store, you cannot buy a Labubu, and oftentimes you have to go to the secondary market and go with scalpers. And unfortunately, scalpers are making more money than the company itself. And I do think that Pop Mart has to just concede and say, okay, I am making 30 cents on the dollar, and the scalpers are making 70 cents, because as a collectible, it's very important to have a secondary market going.
Surely it's a really interesting trend, and seeing how it's playing out in markets as well, just as fascinating. Bloomberg opinion columnist Shu Li ran for us. Meantime, President Trump's tariffs are putting unprecedented levels of stress on Chinese manufacturers. Bloomberg visited one toy factory in Shenzhen to find out how it's dealing with the on-again, off-again trade war. China correspondent Min Lo reports.
The Barbie blow dryers and vanity kits, as well as these game sets, are just some of the toys made at this factory and shipped to the United States and around the world. Manufacturers are rushing to ship the goods as quickly as possible to avoid President Trump's tariffs on China.
The tariff impact on our industry is big, especially for companies like ours, where the majority of clients are based in the U.S.
Thousands of factories in China have been caught up in the trade war. America's largest toy maker, Mattel, has warned tariffs on China could lead to higher prices for consumers, with President Trump threatening the company directly.
They said, well, we're going to go counter. We're going to try going someplace else. That's okay. Let him go, and we'll put 100% tariff on his toys, and he won't sell one toy in the United States, and that's their biggest market.
Illinois-based toy company Learning Resources relies heavily on Chinese manufacturing. It has filed a lawsuit against President Trump, alleging he exceeded his presidential authority. Some toy factories like Bill's are looking to move new facilities to Southeast Asia to bypass the tariffs.
We are exploring overseas opportunities. For example, we are establishing a new manufacturing base in Vietnam, which is expected to begin operations in July.
Bill says for now, his employees in Shenzhen are working overtime, taking advantage of the current U.S.-China truce. But if Beijing and Washington can't strike a longer-lasting deal, there will be plenty of tears to go around. Min Lo, Bloomberg News.
Quick check on U.S. assets before we round out the show, seeing treasuries catching a bid against a backdrop of bets coalescing for a July rate cut. Meantime, the dollar continues its slide. That's it from the Asia trade.